Welcome back to my channel. One of my biggest goals for 2025 is to crank up the efforts on my YouTube channel. While in the past you've seen more of a listing video focus with occasional tips and tricks, the goal is to bring a whole lot more value-driven information that will be helpful to buyers, sellers, and investors trading in Calgary and surrounding areas. So without further ado, Happy New Year, everyone, and let's get started. Why should you watch this video? If you're thinking about buying and or selling in 2025, it's always important to understand economic factors and how they can impact the real estate market. Understanding these factors will help you come up with your own thesis on what's to come, and thus will help us strategize and come up with a plan or a timeline that works best for your goals. Now, while this isn't a typical market update, as the December 2024 stats have not been released as of the date that I'm shooting this video will serve to highlight important factors impacting the Canadian market and us here in Alberta for 2025. This is a super important video and a great place to start so that future market updates make sense. With that being said, going forward, you can expect a monthly market update from me, which will be a one-stop shop where I've already compiled all the relevant information that you need to know about. Buckle up, let's go. If this is the type of content you've been looking for, please show your support and don't forget to like, share, and subscribe. In order to understand the real estate market locally and get an idea for what's to come, we need to understand economic factors that affect Canada as a whole, as well as specific factors impacting our local market. So here's the top trends without going into excessive details and in no order of priority. If you haven't heard yet, the Bank of Canada has this magical number that they like to see national inflation stay around, which is 2%. After reaching a 40-year high in June of 2022 at 8.1%, the Bank of Canada began its rate hiking frenzy. It took 10 interest rate hikes to get inflation back down to its target of 2%. And now the Bank of Canada has claimed victory on inflation. Yay! So what do we have to worry about now? Well, while we don't want inflation getting too high or out of control, we also don't want the opposite problem, which is the economy becoming too slow. With signs that the economy was weakening, more on that to come, the Bank of Canada has taken a proactive approach that has already led to 5 decreases to the overnight lending rate. And some analysts are saying that we can expect to see approximately 3 more cuts in 2025, potentially taking the policy rate to 2.5% by mid-year. Currently, it's sitting at 3.25. Remember that the Bank of Canada meets 8 times a year and can adjust the policy rate at these meetings based on what economic data is showing. Now, what do these decreases mean for you? While the policy rate won't be going down to pandemic levels anytime soon, a lower policy rate makes it cheaper for Canadians to borrow money, thus stimulating growth and investments and increasing consumer confidence. Lower rates have historically attracted more home buyers into the market as it increases your buying power, while also giving some financial breathing room to those with home equity lines of credit and or personal lines of credit. And it brings relief to mortgage holders who are renewing their fixed rate mortgages or have a variable rate mortgage like myself. Now, it takes about 12 to 18 months to see the impacts of these rate changes. And with 5 decreases in the books and more to come, we know that something is brewing on the horizon. However, I'm not ready to call any bets yet, especially not until we see what's going to happen down south and with other uncertainties and opportunities, which I'll go into in this video. President-elect Donald Trump will be inaugurated on January 20th and has threatened to impose 60% tariffs on Chinese goods and 10 to 25% tariffs to other nations like us here in Canada. This will be a very important realignment of global trade relationships that we'll have to wait and see what happens. The big question is, will Trump elect to exclude oil and gas to avoid higher energy costs to Americans, a promise that he made in his campaign? Or will we see tariffs applied to Canadian oil and gas exports, and if so, by how much? According to ATB Financial, the base case is that some type of tariff will be in place. So if we assume a 10% tariff, but that Trump excludes oil and gas, in that scenario, Alberta could see a decent year of growth at 2.5% real GDP. For pessimists, if Trump proceeds with 25% tariff and Canada retaliates or we have a trade war, they could see a recession of a 0.3% decline in GDP. And for optimists like myself, there could be a growth of 4%. I know this may sound crazy, but it's important to remember that this is an election year in Canada. And with signs of diminished support from Justin Trudeau and his team, a new prime minister, minimal trade action, and if some big projects proceed like carbon capture and storage and AI data centers, all this could change everything. So my next set of factors are all interrelated and already happening right now. The question is our economy in Canada not doing well? Is this affecting Trudeau's overall support? Despite efforts from the Bank of Canada, challenges still remain after the cuts. After all, Canada's economic health is a joint effort and not just dependent on the Bank of Canada's decisions. There's been lots of talks about Canada's productivity emergency. Why? Well, the per capita GDP has fallen for 6 straight quarters, and this is the 3rd quarter that GDP growth is slower than the bank's forecast. Also, private sector job creation is slow. The unemployment rate hit 6.8% in November, which is the highest since January 2017, excluding the pandemic, and jobs are not keeping up with the number of people looking for work, especially for youth and newcomers. All in all, Canada is underperforming the US, thus cutting interest rates faster than the Fed down south, instead of their usual approach, which is to adjust the policy rate in line with what the US rates are doing. This divergence and risk seen with tariff threats have caused the Canadian dollar to plummet, which is making it harder or more expensive for anyone traveling or importing goods from the US. However, this could also be attractive for exporting Canadian goods even with tariffs, as a lower Canadian dollar makes our goods cheaper to US buyers or importers, which is something that not many are talking about. Now, brought locally, how can Alberta maintain a productivity advantage that is largely driven by oil and gas, yet continue to diversify? What does productive diversification look like, and are we already there with a tech takeoff? For many years now, we've been hearing about diversification and tech in Alberta, and for the first time ever, Alberta overtook BC as the 3rd largest province for venture capital raised in the first half of 2024. And Calgary scored highest amongst North American locations in tech talent growth over the last 5 years. Now, going back to what remains the primary driver of our economy and Canada's growth in 2024, oil production continues to set new records thanks to the Trans Mountain expansion. So as long as tariffs remain under control and other projects get the go-ahead, we could be in good standing for many years to come. While housing affordability remains challenging in Canada as a whole, this continues to be an opportunity in Alberta. Why? Because housing remains relatively more affordable here than in other markets like BC and Ontario. And with the remote work trend, people are exploring options like Edmonton while chasing affordability. Alberta once again led all provinces in population growth in the 3rd quarter of 2024. It's also the 9th straight quarter that Alberta has led all provinces in interprovincial gains, with our population standing at 4.93 million as of October 1st, 2024. With that being said, is the trend here to stay? Will Edmonton take the lead, or will people explore other provinces like Saskatchewan? How will the government's decision to reduce its temporary residence target impact real estate locally in the long term? Remember that Canada has a foreign buyers ban, so temporary residents are not allowed to buy Canadian real estate. This could impact rental demand, thus impacting how lucrative it is to buy investment properties in Alberta. Lastly, the government has announced multiple changes, such as that first-time home buyers can extend their amortization to 30 years on all properties, not just new builds. Previously, 30-year amortization was only available to uninsured mortgages. So this increases purchasing power and reduces monthly payment costs for buyers. Now you can also buy up to a $1.5 million home with less than 20% down payment. Previously, this was capped at $1 million. While this rule change will mostly help buyers in more expensive provinces, this change could also increase demand in our local luxury market. There's also a secondary suite loan program and refinancing for insured borrowers to add secondary suites to their current homes. All in all, there's plenty of factors that could impact Alberta's real estate future. But analysts are expecting our population growth to slow down a bit in 2025 due to a pullback in international migration. Yet, Alberta's GDP is still expected to outpace the national economy this year, predicted to grow by 2.5% in 2025 and 2.3% in 2026 due to a strong energy sector, emerging markets like technology and petrochemicals, and continued gains from interprovincial migration. Alberta will be among the provincial growth leaders, if not the leader, again in 2025, despite these uncertainties. So as you can see, making any predictions at this point is risky. There's so much momentum going into 2025 and so many moving parts, but overall, I still feel confident in investing in Alberta real estate, and specifically Calgary and surrounding areas like Cochrane, Okotoks, High River, Airdrie, and even going as far as Edmonton, chasing affordability. So please let me know in the comments, what do you think we're in for this year? Are you ready to make a move? I look forward to reading your comments.